Hi, this is Pat with Energy Solution Partners sharing with you our energy market view on Tuesday, October 21st. Keep in mind there is a risk of loss when trading commodity futures and options. We've had a lot of questions over the last few months as this market has really sold off hard. When is the right time to jump in and buy as we look out into some next year contracts? We've been real hesitant watching this sell-off because the trend has been pretty substantial, and they always say in the market the trend is your friend, and pretty hard to step in front of this. But now, as of late, we're seeing some interesting things in the market and pertaining specifically to the heating oil or diesel market, and that's what our comments are going to relate to today. First of all, from a fundamental standpoint, and I realize that this chart is pretty busy again, but what I want to point out from a fundamental standpoint is where our days of supply are sitting at today. And as we look at days of supply, that's one quick snapshot of both the supply and the demand situation. Taking current supply divided by the current demand gives us our number of days of supply. Today we're sitting with 33 days of supply and inventory. We are at the lower level of where we've seen the last several years, although we have seen 2 years that were lower than this, and that was 2008 when we had our big spike, and also 2012. And we're sitting here today pretty much identical to where our days of supply was a year ago. So from a fundamental situation, not a lot has changed from what we've been seeing here over pretty much all of 2014. So as we again look at the sell-off and try to figure out what's taking place here, and it does look like it's purely financial selling and doesn't have a lot to do with supply and demand fundamentals. The suggestion on fundamentals also shows up in the forward curve, and as we look at what the forward curve on the diesel futures look like on the white line down below here, that's where we closed at today. And with this forward curve, you can see the May and June months are trading 4 cents less than where the current month of November is trading at. So what this suggests is the market is not giving you any incentive to store product, and also suggests that demand is strong because they're willing to pay more for it today than what they are to put it in storage. And what the blue line is up here, it's the same forward curve from 2 weeks ago, right as this last big leg of selling took place. And we're actually in a little bit of a carry market here. So what that was saying, it was giving you some incentive to store the product, and the market didn't necessarily need it today. But that curve has changed, and so as the sell-off took place here over the last 2 weeks, we've seen the spread where the front month sold off 9 cents from 2 weeks ago, but the outer months sold off 15 cents. So again, the way the sell-off took place, it suggests it was more of a financial sell-off and really did not have a lot to do with the fundamentals, or we would have seen heavier selling on the front month if it was fundamentally related. So again, this looks like it's all financial related. To go along with that, we'll take a look at the Commitment of Traders report. And as we look at where it was as of last week on the heating oil contract, again, this is managed money or the speculators. And we're sitting 30,000 contracts net short position. And that's about as short as I've ever seen it from this group of traders. We have gone below zero before, which is net short, but 30,000 contracts short is about as short as I've ever seen it. And if we look at that sell-off from when they started selling back in June, where we're 40,000 net long to 30,000 net short, so a change of 70,000 contracts, and that's the equivalent of 2.9 billion gallons of diesel that was sold just on paper, and that's billion with a B. So again, what this is telling me is there's a lot of money sitting on the sidelines. When they get in a net short position, at some point they need to come back, cover that short, and whenever momentum comes back into this market, these guys can push this thing very quickly. If we look back, the purple line is where we were at a year ago, and we did also run into a net short position there, but did not last very long, and that took place in mid-November, early to mid-November. And then if we look when they started buying, what the market did, this is also where the seasonal bottom was last year. and the market rallied from there, and I'll pop a slide up of that here in a bit. This daily chart of the heating oil contract is also of interest to us. Is we've watched this trend being so sharp to the downside here. We're stepping aside waiting for some signs of a turnaround here, and the trading action over the last couple days, I guess, is definitely of interest to us, and it just looks like we're forming a bottom in here. And this yellow line through here is the 5-day moving average. That's a very short-term indicator, but as you can see all the way down, the market stayed below this 5-day moving average. There's a couple occasions here where it popped above, but then it came right back down. But now over the last 3 days here, on Friday last week, you can see we closed above the 5-day moving average, and then Monday's trade, we actually traded higher than Friday's high, and again today we traded higher than yesterday's high, and all 3 days we've closed above that 5-day moving average. So those are some indications that I was looking for. And the other thing we'll watch on this 5-day moving average, it looks like this line is shifting direction here, and as we open trade for tomorrow with the new higher price in the futures contract, we'll see this line turn higher. So for the first time, we're seeing this line turn around and actually start pointing to the upside here. So from a technical standpoint, I guess that's some things that we're looking for, kind of the momentum of the market or the psychology of the market. But anyway, the way this thing is shaped out here over the last few trading days is of particular interest to us. Going along with the sentiment indicator, the psychology, showing a monthly chart of the futures contract here with the stochastic study down below. And again, the stochastics is an indicator whether a market is overbought or oversold. And when we're down in this area, this would be in an oversold area. Conversely, if you see it on the upper end, you're in an overbought area. But we're down in a very interesting area of being undersold. And the last 2 times we were down this low, we have to go back to 2009, coming out of the financial crisis here, where the market bottomed out. Look where we're at in the oversold position there, and what the market did from that point going forward. And then also back in June 2012, and I think this was the European crisis and the Greece mess that we had. We got very oversold there. Look what the market did. We went from that point and traded higher into the fall months there. So as we look at the stochastic study today, we are oversold, and where we go from here, I guess it's still to be determined. But just putting all the pieces together, I guess the current diesel market we think is very intriguing at this point. Now, if we look at the seasonal trends, the blue line here is the current futures contract where it's at. Going back to last year, 2013, the seasonal bottom came in November, and we went higher from that point. You can look back at some of these other years. 2012, we actually bottomed in October, went higher from that point. So there is a seasonal tendency to bottom out sometime in this October to November time frame, and then move higher from that point. So as we start looking forward to spring needs, we think these spring values are very attractive at this point. For the most part, we're seeing contracts that are 40 cents or better below last year's levels where most of the contracts were written. So if there are any needs for spring, we think this is a good time to take a look at some of these values that are out here today. If you'd like to discuss this market in more detail, we'd be happy to visit with you. Give us a call. Thanks for listening.